Hello and welcome to Financial Technology Frontiers Live. Friends, Financial Technology Frontiers have been bringing to you some of the leaders in the financial world, in the world of Fintech, and in the world of technology. Today, we have taken one of the most interesting topics which has been making a lot of rounds in Canada. Open banking has been one of the hottest topic which has been running for quite some time now. There has been a lot of news that open banking has made, right from the regulations, from the technology, from the overall implementation perspective, the ecosystem perspective, and more on. We have got today with us Mr. Eyal Sivan, who is the general manager of Ozone API. More importantly, he's an ecosystem builder and called as Mr. Open Banking, who conducts his wonderful podcast series called as Mr. Open Banking. He is also on the board of Financial Data Exchange as well as Open Financial Services of Canada. We are going to learn from him some very interesting perspectives about where have we begun, where are we today, what are the bottlenecks of open finance in Canada, in especially the financial services as well as from the regulatory perspective, and what promise does it hold for the future. More importantly, for the fintechs and the financial technology players, you are going to also see what are the kind of opportunities that this will bring in terms of technology adoption, implementation, and their business to the next level. So friends, join me in welcoming Mr. Eyal Sivan, who is the Mr. Open Banking of Canada. Eyal, welcome to Financial Technology Frontiers.
Pleasure to be here, Babu. Thank you for having me.
Thank you very much, Eyal. So, just to give a little background of how has open banking been making its inroad in Canada in the recent past. We read some very interesting insights from the Conservative Party speaking about how it is becoming a very strong political platform for the governments to come as well. So, where has the journey reached till now?
So, it's a journey that actually goes back all the way to 2016. It's something that started with a very early bank consortium efforts. I was actually part of the technology team at CIBC that was responsible for our voice in those early consortium efforts. And then in 2017, you saw the first trickles of analyses and consultations coming out of the government. It began with a now famous paper known as the Review into the Merits of Open Banking, where a lot of banks, large and small, opined about what they'd like to see, why open banking was important. That input was taken in by the federal government, and they released this report, which was very bullish. It talked about that open banking would be a great benefit to Canada. Since that time, you've seen a number of milestones happen, including the advisory committee that was formed, the release of a final report on the direction of open banking, the appointment of an open banking lead, a wonderful gentleman by the name of Abraham Tachian, who did a great job assembling working groups, bringing stakeholders together, publishing a final set of recommendations for the federal government to pursue an open banking regime in Canada, and ultimately leading to the Fall Economic Statement in 2023, which announced that open banking was going to have some budget elements included. In 2024, that budget was granted. You saw the first draft of the Consumer-Driven Banking Act incorporated as part of the Budget Implementation Act Part 1, which received royal assent. So, strictly speaking, for those out there keeping score, Canada does have the beginnings of open banking regulation in place today. It's only about a dozen pages long and relatively high level, but it's a start. And then BIA 2, which was released later in 2024, included an elaboration on the Consumer-Driven Banking Act with additional provisions. Considerably larger budget was granted as part of the Fall Economic Statement in 24, so going into 25. However, due to political difficulties in Canada, a lot of that activity was put on the shelf. Now, the way I describe the story, it sounds like general progress, but frankly, there is a flip side to that. From the perspective of a lot of people, it's taken much longer than it should have. Several dates had been promised in terms of go live that were missed. So unfortunately, even though there's been a lot of good consultations and a lot of good work done, we still don't have a firm date. We don't have a firm timeline. We don't have the selection of a technical standard. And now with the political difficulties that Canada is facing, it's unclear exactly when we're going to get more progress on the open banking file. The good news is it has become something of an issue going into the upcoming election cycles.
Political agenda.
Very much so. Just yesterday, and I don't know when folks are going to be viewing this, but on February 19th, 2025, you saw the Conservative Party stand up and say, as far as we're concerned, if we are elected, we're going to go big on supporting open banking, in contrast to the Liberals who, from their perspective, have been dragging their feet. So it's nice to see that it continues to be a bipartisan issue. Even though each party brings something unique to their perspective on open banking, it does look like we will eventually see real open banking in Canada. I hope so.
Perfectly all right. And I think at the end of the day, it is the willingness of the industry, the willingness of the regulators, the willingness of the government, everything has to integrate together to make this big thing happen.
It does. There's no question. There is a misunderstanding in open banking circles in thinking that it's a decision whether you want to be regulatory led or market driven, when in reality you do need those forces to get along. Everywhere that open banking has worked, the market and regulators have found a way to work together to make it work. Canada is no exception, and the market and the regulator will have to find a way.
Super. From whatever you have seen in open banking so far, how far have we traveled, and what is the path to cover when it comes to making this a reality? How much of work is done and what is pending?
So, unfortunately for Canada, there remains considerable work to be done. As I said earlier, we haven't picked a technical standard yet. That's something that could be considered low-hanging fruit. We've assigned an oversight body, the FCAC, who has been designated as being responsible for bringing this open banking system to life. One of the things that they could do, even in the absence of clear direction prior to the election cycle, is double-click on that technical standard. See if, for example, FDX, the Financial Data Exchange, is the right standard to follow, such as was declared in the US earlier this year. Does that make sense for the Canadian environment? What steps have to be taken to perhaps create more independence and specificity in the FDX variant that exists in Canada? But that's something that's low-hanging fruit. So that has to be done. Declaration for a single technical standard, and starting to move in the direction of making that standard available to folks who want to build against it. This is in line with the commitments that have been made already in terms of there being a single technical standard. That's already part of that first piece of legislation that received royal assent. So if there's going to be one, pick one. There aren't a heck of a lot of choices. The other areas where we can move are the same areas that were also identified in that legislation. Development of a registry and an associated accreditation process that will allow for players to register their interest and begin to move towards participation and listing in that directory. Canada already has a model for this. We've started to move in that direction as part of RPAA, the Payment Modernization Act. In there's already a registry system for payment services providers to submit their interest and become registered. There's a lot of work there that can be leveraged for open banking. So that's another area where you could see real progress in developing a registry and an accreditation system. Beyond that, it would be great to move towards pilot environments. Organizations such as SimCorp are already working towards that. But it's crucial that those pilot environments include players beyond just the big five. Open banking really is about driving competition and innovation, which means it's crucial that you include players large and small.
Interesting perspectives. I think that gives a overall picture of where we are heading to. Now, from the rails perspective, okay, the rails for making open banking possible. There are few existing rails in the economy or in the industry today. Of course, you need to build new rails. How much of overlap is there, and what new needs to be built?
So, Rails is a fun word. It can mean different things in different contexts. Oftentimes, you hear the word Rails in the context of payments. In Canada, we approach payments in a very particular way. We have Interac, a bank-owned consortium that essentially facilitates all payments in Canada, more or less, acting as a kind of hub. That is different than what we need for open banking. Open banking, while very much related to payments, is more about data sharing. In the Canadian approach, at least initially, it's going to be read-only. That is code for getting information, sharing information, as opposed to write, which equates to payments in other open banking systems. Both in the US and Canada, the relationship between read, i.e. data sharing, and write, i.e. payments, is a dotted line. Both the Canadian and US regimes have said, we'll worry about payments separately / later. So the idea of a rail referring to payments in an open banking context doesn't really apply in Canada, at least not yet. In terms of the data sharing rails, again, the US and Canada share some similarities. Data sharing already exists in North America and is widely used. However, the way that it's done is often highly insecure, using a mechanism called screen scraping, which involves sharing your bank credentials with a third party, who's often unregulated. These third parties are typically under the label aggregator, and they themselves aren't big fans of screen scraping. They're trying to move towards secure data sharing based on tokenized APIs. So you're seeing a shift away from this screen scraping based rail. But what makes open banking special and unique from even tokenized APIs provided by these aggregators is that it's based on common, open, shared standards. That's the magic of open banking. The idea that everyone in the ecosystem, large, small, credit union, fintech, bank, works the same way. So that if you want to move your financial data from one institution to another, the APIs are the same. The security mechanisms are the same. They all follow a standard that no one owns, that anyone can use. So when you hear the term open banking, which some people say is a little scary, it conjures up this idea that your data and heaven forbid your money is just sort of out there in the open. It's not meant to create this idea of an open door. It's more like open source, in the sense that open source is driven by common standards, open banking is driven by common standards. So the rail that has to be put in place is a mechanism to support data sharing based on a common shared standard. And that's why it's so crucial that we pick one. We've already decided we want one common standard. It's declared in the legislation received royal assent. Now it's time to get on with the work of picking one and moving towards building an actual system that supports exchanging data based on that common rail built on open standards.
Compared to countries like UK or Australia or US or any other developed economies of the world, how has Canada tried to imbibe some of the learnings from there? Especially you spoke about screen scraping and various other technologies. What has been the learning, and what of best of all this has been picked up currently in Canada?
Yeah. So, as I said, Canada has been going through a lot of consultations. So it's hard to say what will actually be picked in the end.
Okay.
Because we haven't built anything that's
Correct.
live yet. However, in the consultation work that's been done, a lot of learnings have been picked up from other regions. You mentioned the UK. So the UK now has a system that has recently celebrated its 6th anniversary, if I'm not mistaken. And they have experienced a hockey stick moment in terms of adoption. It's widely used. It's widely used by the small business community. And it works. In terms of what we learned from the UK, to be prescriptive in certain areas that require prescription, such as the user experience, the journeys around granting consent, how exactly security is to be established between the different players, what kind of monitoring we would like to have in place once the system is live. These are things that the UK built in contrast to Europe when they released their PSD2 regulation. Europe was the first, so they didn't really have a lot of these learnings to build on. As a result, the standards became fragmented and balkanized, the user experiences were inconsistent, so the UK cleaned a lot of that up and was prescriptive in areas where it made sense to be prescriptive while leaving a lot of areas for banks to innovate and compete. So Canada built on that, at least in the consultation sense. The other area that they learned from Europe and the UK was with this notion of reciprocity. Fundamental to the Canadian open banking system is this idea of reciprocity, so that if you provide data, if you consume data, you also have to provide data. And this really addressed a fear by a lot of incumbents that, hey, these fintechs are just getting all of my data for free and getting all of this value for free. I would like something back from them. This is an issue that the UK and Europe wrestled with. They didn't incorporate it strictly into their regulation, and as a result, banks didn't see a ton of value for them and often resisted the regulation. Canada's addressing that head on by saying, no, reciprocity should be built in. This is something that, for example, Brazil, that erected one of the most successful open banking systems in the world, did incorporate into their legislation to great success. So reciprocity is something that we learned from others. You mentioned screen scraping. A question that still is rather unresolved around the world is whether or not screen scraping should be banned as part of adoption of an open banking regime. The reason it's unresolved is because there's really two schools of thought. On the one hand, you don't like this insecure mechanism. It's introducing systemic risk. It's a good idea to move away from it. As I mentioned, even the big players who use it, like the aggregators, are trying to move away from it. However, it provides a lot of value to users. By some estimates, as many as 10 million Canadians use screen scraping to share their data. They want that value. So to say to them, oh, we're just going to take this away until we have something that can replace it, isn't really fair to consumers. And if your goal is to create this dynamic financial ecosystem that provides all this additional value for consumers, why would you take something away from them that might be insecure, might introduce risk, but fundamentally works? So what you're starting to see in regions such as Europe as they move into PSD3 and FIDA is discussions around, okay, how can we do a phased removal of screen scraping as the open banking functionality catches up to what screen scraping can do. Canada has not outright said that they're going to ban screen scraping, but they did identify it as a systemic risk. So it's going to be interesting to see how exactly we approach it, whether it's a phased approach. It's certainly something we are learning from others. The other area that's worth mentioning is this move towards open finance and then eventually open data. One of the things that makes Australia very unique, which you mentioned, is that from the beginning they approached open banking as something that wasn't limited to banking. Whereas regions like Europe and the UK and Brazil approached it as financial sector and moved from open data to open finance, which is to say, beyond just retail banking, moving to spaces like insurance, wealth, etc. The Australians took it a step further. They called their open banking regulation the consumer data right. Now you'll notice there's nothing in there about banking or payments. It is a generalized consumer data right. From the beginning, they said, if people have a right to share their data in banking, why does that right not apply to other sectors of the economy and indeed to all of their data? So from the very beginning, the Australians approached this thinking that banking was first, Finance was second, but after that, they moved towards open energy, open telecom, open healthcare, with the aim of creating a generalized data right across their entire economy in all sectors. This is an idea that has really caught on around the world, and now in open banking circles, it's widely accepted that the direction of open banking is to move from open banking to open finance to open data. And that, frankly, is what makes it such an exciting movement. Open banking is just the beginning of something much, much larger, a fundamental shift in our relationship to our data and our relationship to our technology providers.
Super. I think that was quite a great explanation of the overall ecosystem where it stands. And you have been an ecosystem builder, you have been an ecosystem player, you are a part of Open Finance Network, you are a part of Finance Data Exchange and the board of Finance Data Exchange. What is the role of ecosystems in helping to shape up this? How are the ecosystems working with the government and the banks to do this?
So if by ecosystems you mean industry consortia, as I said earlier, they play a crucial role. You can't do this in a way that's entirely led by regulators in the same way that you can't do it in a way that's entirely market-driven. The two forces have to work together. I think the place that understood this best and earliest was the UK. Although a lot of folks like to paint the UK as being heavily regulatory driven, and it is true, they were prescriptive in certain areas, and ultimately the move towards open banking was begun through a regulatory mandate, what was known as the order, or the CMA order. The misunderstanding was that the organization formed to implement open banking, the OBIE, now called Open Banking Limited, was private. It was not a government agency. It was a private agency purpose-built to implement open banking with representatives from the CMA 9, the 9 largest banks in the UK, as well as a board seat held by a regulator. But the organization itself was a market-driven organization that was trying to achieve a regulatory goal. That was a very successful model. It essentially had the regulator playing the role of setting the goals and the guardrails, essentially the rules of the game, and then said to the market, okay, these are the rules, now you guys get together and find a way to play within these rules. That model works. The balance between market-driven and regulatory-led is different from one country to another, and it's all wrapped up in the culture, the relationship people have to their banks already, the goals themselves that you're trying to achieve, whether that's innovation or competition or financial inclusion. But striking that balance the right way is crucial to success. What that means is consortia play that critical market role. If you look at the US, for example, they achieved a great deal of open banking adoption, which is to say adoption of a common shared standard in an entirely market-driven way. FTX achieved over 200 members, over 90 million records shared without any regulation at all. And that's unique in the world. There isn't any country that managed to pull that off. But at some point, the Consumer Financial Protection Bureau looked at the activity and said, there's some stuff in here that makes us as regulators worry. There are monopolistic tendencies. The weighting of the way FTX is structured doesn't seem to allow smaller third parties and smaller data providers to participate on equal footing. And this was despite FTX's best efforts to make sure they remained fair and democratic. There was just some things that they couldn't do because at the end of the day, they're a member-driven nonprofit. So the regulators stood up and said, we're going to introduce regulation. And they penned Section 1033, which was the basis for their own open banking regulation in the US. What is also known, crucially, as the Personal Financial Data Rights Rule, right? Fascinating that data rights found its way into the name of the US legislation. Now, I mentioned political challenges in Canada. There are political challenges in the US as well. The CFPB in particular has been on a bit of a roller coaster for the last couple of months since the election, since the change of administration. So it does remain unclear exactly what the future of the agency is, how that future is going to affect Section 1033. But one thing is clear, open banking in the US isn't going anywhere, and that is largely because of the effectiveness of FTX, a market-driven, industry-led consortium.
Superb. Now, coming from this, bottlenecks that we have discussed with respect to legislations, coming from the participation of the banks and financial institutions and fintech, you have been meeting a whole lot of people from the industry. Is there a fear that this is going to probably gobble up a lot of monopolistic practices in the banking industry? Or are the smaller organizations scared, or are the larger organizations in the banking sector scared that their data would go to others, or probably the fintechs? How is the industry taking it together?
So it really depends on who you ask. I think whether you're looking at large incumbents or young upstarts, you can find people that are bullish and you can find people that are bearish, and they will make an argument in both directions. And I think all of those arguments are important and need to be listened to. Yeah, they're valid. They're usually well-founded. The most obvious, immediate argument that you hear is, I'm a large bank, I have all this data right now, and I don't like that fintechs are being given the ability to just sort of take all this data from me. This is the bearish case that is made by incumbents. On the other side, you'll hear fintechs, particularly in Canada, say the way this is being approached is similar to Interac. It's creating a moat, it's preventing small players from participating. There needs to be a more fair way of supporting smaller players participating. Indeed, the recent announcement from the Conservative Party that they're going to approach this differently than the Liberals, one of their key messages is the system as it's being built now is rigged in favor of incumbents. We're going to make it more fair. We're going to make it more inclusive. So you have this bear case on either side. At the same time, you have bulls on either side as well. And that isn't necessarily only from small upstarts. In the case of banks that understand the potential of open banking, they recognize that not only can they most obviously act as consumers of data, just like a fintech would, they now have access to data from their peers, they have access to data from all of these fintechs, so they can build a better view of a customer and serve their existing customer base better. But if they really start to think in terms of futuristic scenarios driven by AI and embedded finance, they recognize that fundamentally open banking creates an entirely new channel for them. It's a way to get to customers that they just couldn't get to before via fintech partnerships. So when you create APIs based on common standards and invite the fintech ecosystem to come and join and build things on top of those APIs, you can get to places and get to customers in ways that you just couldn't do if it was just you. So the bulls at the banks, the smart ones, recognize that this isn't just about keeping customers in your four walls and making them happy working only with you. It's about supporting customers in their digital life, no matter where they go, and being there when they need you, and then sort of fading into the background when they don't. Those are the smart ones. On the fintech side, I think that the bull case is even simpler. Fintech now has access to a wide range of data. They can now create scale at a level that would be incredibly difficult for them to build if they were starting from zero customers. If they come up with the right offering, they can essentially get to millions of customers practically overnight if the offer makes sense. So I think that there's bulls and bears on both sides, but maybe I'm biased. I'm very
Absolutely.
bullish.
See, you have to take a center approach, and you have to make sure that this thing is successfully not tilted on the either sides, but it goes towards the benefit of the customer. Now, one of the largest customer segment is the small and medium enterprises. I think 80% of Canadian business is full of small and medium enterprises, and many of them even today don't have access to the required amount of credit. And I am sure that with open finance coming into picture, this would be sorted to a greater level. Is there any interesting conversation happening about, bettering of credit facilities to SMEs through open banking?
100%. That's one of the key use cases. So I mentioned the hockey stick of adoption that happened in the UK. That was largely driven by small business. If you look at the open banking consumption in the UK, it's more than half small business. The amazing thing about small business as a use case for open banking is that unlike a lot of the retail use cases, small businesses will actually pay for additional value. If you're a retail consumer, you aren't necessarily going to actually fork out an additional monthly fee for the ability to, say, see your accounts in one place or have access to different alternative credit. You just sort of expect the bank to provide that,
Correct.
the same way they provide a mobile app. Not so for small business. If small business has access to better product offerings, unique credit facilities, they will actually pay for those services. So it creates a marvelous revenue opportunity for banks. Credit is a big part of that. So what you're seeing in other markets is a lot of that small business activity is fueled by exactly that use case. Rapid access to credit based on alternative mechanisms of verifying credit worthiness, so thin credit file adjudication, being able to tie that to personal adjudication, and that is a major driver. That is ultimately leading to GDP growth in regions that have seen the small business curve in terms of open banking adoption rise. So that is something that Canadian fintechs see and are eager to embrace.
Lovely. And when you come to role of fintechs and technology players in the country, now again the stack is being built up, the regulations are coming in place, and ultimately a lot of our readers are technology companies as well, who facilitate the banks and financial institutions to upgrade themselves. So from the technology players' perspective, of course, the biggies of the world, the CGIs of the world, the IBMs of the world, and Capgeminis of the world are always there. What is the scope for mid and smaller players in open banking to get into the Canadian market? How open are these markets for the companies in the mid and smaller range? What opportunities exist?
So, again, we don't have anything live yet. However, it's important to note that hasn't really stopped Canadian fintech from growing. If you walk through downtown Toronto today, every second billboard is some fintech provider. It is a financial services provider that is not one of the big five. Not so long ago, when you walk through Toronto, you would see posters for the big five. Now it's posters for Coho and EQ and Wealthsimple and Questrade. So it's nice to see that Canadians are
Investing
in these alternative financial services providers. I don't think that's lost on the young folks who are trying to start a fintech, and I don't think it's lost on the big banks either. There's clearly a shifting of the tide. Folks are ready to bank with multiple providers. They will bank with smaller providers. They will bank with digital-only providers if the offers coming from those providers are what they are actually looking for. Gone are the days of, I'm with this bank for life. That's just not the case, and frankly, it's not the case anywhere in the world. If you look at the statistics, folks are happy to bank with 6 to 8 providers. They're happy to have specialized products with each of those providers that serve different needs. And what they want, what they demand, is that all of these providers work together seamlessly. Enter open banking, that's essentially what it facilitates. So the opportunity is fundamentally driven by consumer demand. Open banking makes that a lot easier. So it ultimately encourages that competition, innovation, and growth in your financial sector by making that easier. But the consumer demand is already here. If it wasn't here, you wouldn't see all of these providers popping up.
Absolutely. And this will also bring in concepts like interoperability of accounts amongst different banks. These are some of the great benefits that you can see.
Yeah.
Apart from the fintech, I am speaking also about the technology service providers
Right.
who provide security, who provide platforms. What kind of people you see will thrive in this kind of atmosphere?
So it's a great question. There are certain building blocks that you need to make open banking work. In keeping with the general trend of compartmentalization and modularization that exists within banks, this kind of unbundling trend, which has now been around for, a decade. The idea of unbundling is old hat in Silicon Valley, but you're seeing it come to financial services, where smaller technology providers are providing very modular, very compartmentalized capabilities, such as identity verification, dynamic payment rail capabilities, specialized credit adjudication, which you mentioned.
Customer onboarding.
Yeah, accounting as a service, treasury as a service. So all of this stuff indicates that niching within financial services has become a very valid approach to building a technology company. Banks are happy now to deal with lots of small providers who solve individual needs, and a lot of that is down to the strength of APIs. You mentioned that I was with CIBC for 15 years. I was the API guy over there. I helped develop their API strategy over my entire tenure. And what you saw there was a continued trend towards this unbundling into compartmentalized parts that you could then stitch together like Lego if you had a strong API strategy. That trend has continued, in particular with the rise of the mobile era, and open banking just accelerates that further by creating that common standards base. So I would say to the small technology providers out there, pick a niche, become really, really good at that niche, and make sure that you have very strong APIs, ideally based on open standards, for tying that module into a larger banking infrastructure. In fact, I work for a firm, Ozone API, who does exactly that for the open banking space. We solve the last mile of open banking for data providers who are looking to adopt common standards, and we make it very, very easy for banks and partners to incorporate that technology into their existing infrastructure or offering.
Does standardization of API also go a long way into this?
Absolutely. Look, APIs themselves only work because they're based on common standards. When I started at CIBC, it was the beginning of the SOA era, the service-oriented architecture. And what did that mean? That a standard called XML came along and a messaging protocol called SOAP came along and said, you don't have to come up with your own way of structuring data and composing messages. Here's a common open standard way of doing it. Then fast forward to the 2000s, the rise of mobile, and you saw a shift away from SOA into RESTful APIs, which meant no more XML. Now you use JSON, and instead of SOAP messages, you're sending HTTP-based messages. Again, JSON, HTTP, these are common, open, shared standards that anyone can use to build standardized APIs. That's sort of why I fell in love with the whole idea of open banking. When I first learned about it, this idea that, driven by legislation, European banks were moving towards common open standards for the secure exchange of financial data, it was a bit like being struck by a bolt of lightning. This was my entire career. So when I understood what was happening, I said, well, wow, this changes everything. Suddenly, the cost of integrating banks drops way down. The cost and effort of creating a new fintech that takes advantage of these APIs to create new financial services comes way down. And this ultimately creates a new base for an entirely new financial ecosystem, and indeed, as you move towards open data, an entirely new internet. And that's what gets me out of bed every day, and kind of why I became Mr. Open Banking.
Wonderful. And when you are speaking to the banks, the fintechs, and the technology service providers who are working towards creating, what is the advice you would give to each one of them, especially the smaller banks who are not so tech savvy, on one side, the credit unions, for example, and of course the larger banks have every resources in their pocket. And what about those technology companies? How to ready themselves to get the advantage, full advantage of the open banking era.
Yeah.
So what would be the stepwise advice that you would give to the technology players first and to the smaller bankers?
Okay, so we'll do it sort of in
Yes.
reverse order. So the technology players, I think I already mentioned. Pick a niche, make sure you have a strong API game, and work that niche, right? Solve a very specific problem, whether that's in open banking or in financial digital transformation in general, and solve it in a way that plays nice in the sandbox with others. You're not going to beat everything to everyone and provide everything a bank needs. You're much better off providing one thing, doing that one thing very, very well, and making sure it integrates with the other things around you. So that would be my advice to technology companies. And if you're working in the open banking space, pay attention to the standards. In North America, that's primarily the Financial Data Exchange and the API that they publish. And don't reinvent the wheel. There's already hundreds of institutions, if not thousands, that are starting to move towards that standard. Adopt it. Don't come up with your own way of doing it. You're just going to be swimming against the tide. As far as the small banks, embrace open banking. It fundamentally lowers the cost of you participating alongside these large players. Historically, it's been very, very difficult for small players to compete alongside, but as we move into an era where people are comfortable with digital-only services, they get everything through their smartphones, having you listed alongside the big five is not only not difficult, it's downright easy. That's sort of what these standards enable. So make sure that you support the standards so that you do get listed alongside them, so that consumers know your offers exist. And in particular, when it comes to organizations like credit unions, who are so tied into their communities and have genuinely unique offerings, open banking provides a way for those offerings to be seen by many more people than they were previously. So embrace it. It really is there to create that level playing field. If you look at the history, it came out of the 2008 financial crisis, where the Europeans said having a concentration of financial services in a handful of organizations is a systemic risk. How do we create a wider playing field that allows more participants? So it's there for you, the small banks, the small financial services providers. It is intended to help you participate. To the big banks, don't be afraid. This is something that consumers fundamentally want. Don't try and think that this is something being forced upon you by regulators or fintechs who are trying to steal your customers. Your customers want this. If they didn't want it, they wouldn't be using screen scraping to do it already for years. And if you can deliver it in a way that they want it, that works well with other providers, that lets you get a more complete view of what they want thanks to the reciprocity capabilities, you can build stronger relationships and happier customers than you ever could have before. So don't be afraid of it. If anything, run towards it and lead.
And what is the final industry voice that you would like to share with the regulators and the government to make this open banking, which was a dream for quite some time, a reality?
Look, I went into details earlier, but in a nutshell, just get on with it. There are low-hanging fruit. Pick a standard, set a timeline, start to move towards defining a registry and an accreditation scheme. You already said you were going to do these things. We have the beginnings of legislation that received royal assent to do these things. Get to work.
I think open banking has been a great leveler all over the world. It has really taken the economies where it has been implemented to greater heights, accelerated the growth of each of these countries, especially in the financial services sector. And it is no doubt that Canada would also move to greater and greater heights by adoption of open banking. The only point is when and how fast we move ahead with it, and everyone is eagerly awaiting to look at it. And thank you for being one of the great industry advocates in propagating this technology and being a helping hand to everyone in the industry who requires the kind of hand-holding to take them to this level in open banking. Thank you very much, Eyal, for this conversation.
My pleasure, Babu. Thank you for having me, and it's been great. And listen to Mr. Open Banking.
Great.
Yeah.
So that is Mr. Open Banking for us. Thank you very much.
Thanks, Babu.